Forget everything that's happened up until this point, because for now, it just doesn't matter. We've officially entered earnings season. And for the next few weeks, the only thing that will move this market is going to be company results and forward guidance. This week, we're going to have earnings from Netflix, Coke, Tesla, among others, and what they say could reset expectations for the entire market moving forward. Earnings season only happens 4 times a year, and every single one of them brings new leadership, new volatility, and more importantly, new opportunities. So today, as always, we will be looking at today, as we do for every earnings season, we will look ahead to this week's most important earnings, where traders may. So today, as we do for every earnings season, we'll be focusing our look ahead on this week's key earning reports, how the market's positioned going in, and where traders may find the next big move. The question now is very simple. Can earnings justify these valuations, or are we finally due for a reality check? Let's get started with the S&P. So the reality is, for the week, the S&P really did nothing. It was very choppy. You had up, down, up, down, up, down, up, down pretty much all day long. You had markets where we would gap down, go green, come back and red, markets that would gap up, start out green, looked like they were going to make a push, reverse, end down red. Then you had days where the market would start green, go red, go green, go red, end green. It was very wishy-washy this past week. A lot of that is indecision. Something to keep in mind is that because we are in earnings season, the buyback machines aren't off. So the market does not have the buyback machine bid there to support it. Granted, we have a week or so before big tech really starts to report, and big tech being Amazon, Google, Microsoft, Apple, etc. So because of that reason, we are not going to have such explosive moves, but companies of importance will be reporting. So we're going to just focus a little bit top line index and then just go right into who's reporting and when and why they're important. So as we said, S&P is chopping up, and you would expect in front of earnings that the S&P is going to have a lot of indecisiveness right now. So got to the 50, held, it's reclaimed the 21, came into the 8-day, reclaimed. It's been just a big sloppy mess. So there really isn't anything you can carry forward here. Let's go to the NDX. NDX, the same kind of deal. One thing we will point out is that when markets are this volatile, indexes lend themselves a little bit more. And we want to point out that when markets are this volatile, even though they're going up, down, up, down, up, down all day long with authority, they're very forgiving. So if you make a mistake, you have a chance intraday to correct that mistake and get back on track. So one of the things that volatility brings, besides opportunity, is markets become extremely forgiving, which is a good thing. So volatility brings opportunity, but it also allows you, if you do make a mistake, to correct that mistake and get yourself back on track. Okay, so that's where the indices are pretty much for the week. They're really not doing much, so we're not going to spend too much time. So tomorrow, which is Monday, the 20th, before the bell, nothing of importance is really going to be reporting. After the close, we are going to get another regional bank. Zions is going to be reporting after the bell. Again, regional banks were a little bit of focus. We're not going to regurgitate what took place because we don't feel it's that significant right now. Plus, you can do your own research on it, so we don't really see a reason. We're just going to jump to Tuesday. On Tuesday, we're going to have Coke in the morning. So Coke is kind of interesting. It's reclaimed its 50-day. Now, I know a lot of you may be saying to yourself, who cares about Coke? It's an important company. It's a company, whether or not you trade it or not, it's a company that does make the world go round. There are certain companies that are considered companies that make the world go round, so to speak. Coke is that, Pepsi's that, FedEx, companies like that, where Amazon, they make the world go round. So because of that reason, you want to focus on what they have to say, because they can give you insights into not only their business, but the consumer. So obviously, Coke is looking pretty good. Coke could probably get to 70. Looks like 70. Look, a big giant move is not going to happen here. Let's just put that out there. But you do have this nice rounded bottom. The stock is definitely turning, so it looks pretty good. and keep it on the radar. Again, not going to be a blockbuster, but it's a good stock. Why not? If you can make money, who cares? Who cares what the acronym is? As long as it's moving, who cares? GE also going to be reporting. This is probably the best one because this consolidation, you're going to break one way or the other. The market's going to go there. Keep this on the radar. Another one that's going to be coming is 3M. 3M usually moves the Dow. It's an important company to the Dow. It's an important company. GM is going to be reporting. Again, U.S. auto consumer. We'll give you some insights into that. It's not a bad play to understand what's going on in the world of the auto manufacturing space, especially on a domestic front. We will get Northrop. This is defense. This actually looks really good. You're getting this pullback to the 50. Last time I got to the 50, we held. As long as earnings and did, which I believe that they will be, given all the war that's been happening around the globe, even though a lot of it has ended. However, there was sales going on. So we believe that there potentially might be a good opportunity here to get to position yourself into Northrop. One thing we will say, we say this every earnings season, and we're going to say it again without fail. If you are a trader and not investor, you should not be buying any stock in front of earnings. Let earnings come out first. Do not jump in front of them. You are asking for trouble. We will do later on this week, or potentially maybe next week, depending on time, a earnings video on how to play it. For now, we do have one that we put out. We'll put a link to it in the description so you can check that out. And a couple of different ways on how to prepare for earnings. RTX also reports. Interesting. It's holding where it needs to. Not a blockbuster, but holding where it needs to. After the close on Tuesday, we get Netflix. Netflix, this is going to be an interesting one. So right now, because I know a lot of people like to look at high beta tech. So right now, as of the time of this video, the expected move in Netflix is $89, $89.50, or $89.47 to be exact. So just take the close on Monday and just add $89.50 to either direction. So $89 up, $89 down, that's your range. That's the expected range on Netflix's earnings. Okay. The stock is doing nothing. So really your best bet is wait to see what they say. Earnings is really what's going to probably propel this thing in its next move. Either it's up or down. Obviously, it will depend on what they say. I would stay away from it until then. It's Tuesday after the close, which means you can start getting involved with this thing on Wednesday. Another one that's reporting is Texas Instruments, Semi-Space. Again, going into it, not really looking awesome, but anything can change, so we'll have to see what happens there. That's pretty much the important ones for Monday, Tuesday. Wednesday morning, we get AT&T, but I'm not going to waste your time with that because there's really not much to look at over there. Wednesday, we get Tesla. The expected move for Tesla, and obviously now it's Sunday night, so there's still time, but the expected move is $27. That's probably going to change going in as we get closer to it. So by Tuesday night, this will be a totally different number. Right now, expectations are about $27. Probably will live around here. Stock is really doing nothing. For now, it's in a holding pattern. Not saying it's not tradable. It's in a holding pattern. Right now, this 440 is acting as resistance. It's not blockbuster. We think earnings will be the catalyst, so we would wait for that. IBM reports also after the bell. That usually has big moves. So we think IBM also, again, a lot of these names are going to be a little bit hard going into earnings because you really have 2 days beforehand. So it's really positioning and book squaring ahead of this. Really, the trading aspect of it is more Thursday. Let's move on to the next one. In the natural gas space, Kinder Morgan is going to be reporting. Stock hasn't really been doing much, so we think this will just continue doing the same thing. That's about it for Wednesday. Thursday, we're going to get some airlines. American will report first thing in the morning. It's a cheapie, so, whatever. The one that's actually going to be on a lot of people's minds, especially metals traders, is this one. Freeport-McMoRan, FCX. They are in copper and gold. They had some issues with a copper mine recently in the past couple of weeks. That report will be heavily dissected. The call will be heavily dissected. There's going to be questions coming left, right, and center. So that stock really now needs some kind of catalyst, some good news catalyst in it right now to get it back on track. Hopefully earnings will do that. That's about it for the morning. We got Honeywell. It's kind of dead money right now. It's not really doing it. The trend is down. When I say dead money, looking from a buy perspective, Maybe earnings gets this thing going. Really earnings is what started this whole move down. Maybe earnings gets this back on track. We'll have to see. The trend is definitely down. There's no reason to even be looking at this right now on the long side. Maybe if it takes out 205, 210, but I think really in order to get excited about this, it's really going to have to get out of the way of this 210 area. That's really will give you some kind of change in trend. For right now, it's just in a channel and it's not really doing much. So we'll have to be careful with it. After the close, we'll have Intel. Again, there's a lot of news with this stock, with the government taking a position in it, the government taking a stake in it, and a lot of the news is already baked into the stocks. We don't expect much. Newmont reports. Obviously, Newmont is moving with gold, so there's nothing that they're going to say on their earnings that's going to move this really any more dramatically than gold did, unless they literally put out hellacious numbers, which we don't think they're going to do. So we think that this is just continues to be a trade with gold. So if you want to be with gold, you want to be in the miners, you just be in this. That's it for Thursday. We'll have Ford, but that's really of importance. Friday morning, not much yet coming. So that's really where we are for earnings this week in terms of importance. Next week, we start to pick up a little bit more steam, but that's really where we are this week. Let's just do a quick recap on S&P and see what's going on. NFLX, we know we started with it, but we're going to end off with it. For now, we believe that the 50-day held. We don't think new highs are coming. We think there's a lot going on that's potentially going to keep a lid on the market. There's a lot of China news coming out. One day, China's tariff, we're going tariff crazy on them. The next day, it's we're not going to go tariff crazy on them. The next day, it's we're slapping them with 100% tariffs. The next day, it's China wants to make a deal. So it's back and forth. So the market doesn't know what to do with this. Then you slap in that whole regional bank debacle from last week, and you get a mix of why we're doing what we're doing. NDX, not much better, honestly, not much better. High beta tech is okay for right now. It's not really doing anything stupendously awesome. We're not going to go through the FANG names because there's really no point, because really they're not the focus. The focus right now is earnings. And if you're a trader, that's where you need to be. Not really looking at FANG names because they're not what's going to be in play. Just plain and simple. SMH, it's okay. Really what was leading us up was the Russell. The Russell took a break. The market took a break. Russell usually signifies risk on and risk off. The Russell took a break. The market took a break. The S&P took a break. So that's really where we're holding right now. Let's just look quickly at NICE FANG. We'll end off with that. NICE FANG, and this is why we're not going through the FANG names. It's stuck in this channel. It's going nowhere fast. It's going to need earnings to propel this thing. One thing we do want to bring out, and we'll end off with this. Let's say, for example, you own a stock like Micron. You look at this name and it's gone from, let's say, $100 up to $202. It was a low here. At the beginning of the year, we were around 96, but let's say $100. But stock has basically doubled since May. So you have to keep things in perspective. Remember, if a stock is rip roaring like this, it doesn't go on forever. What it basically tells you, to a large extent, is that earnings and earnings growth and earnings power are all being pulled forward. So even if you have a stock that's up 80 zillion% on the year, it's not going to be 80 zillion% year over year. It doesn't work that way. They're pulling all the earnings forward. So all the juice is being pulled out. If you're in it, congratulations, be happy. If you're expecting the stock to go from 100 to 200, then from 200 to 400 every 6 months, you're going to be disappointed. So it's just something we wanted to bring out, that a lot of times on these earnings plays, we feel that people don't manage expectations properly, and they look at these companies as lotto tickets, because when people are sitting in them, if earnings come out and blow out analyst expectations, then shareholders are rewarded. But it doesn't always work that way. Sometimes they roll over because it was already built in or was already baked into the stock price. So just when you're trading earnings, just be careful of it, be aware of it. Go on to Earnings Whisper if you need to, just to see who's coming, so you have an idea of who's coming. Write it down. You do not want to be in a name and not realize that there's earnings. You could get your clock cleaned. So just be careful. Don't take stock into earnings. Thanks for watching. We'll see you on the next one.